Good evening and welcome to NeverLossTrading on tonight's presentation. We're going to go as live as we can, try to cover all the questions that might be up there. Just a little check, is sound good? Alrighty, seems to be alright. So, what I want to do first is going through a couple of key elements which successful trading makes out of. And prior to that, you see my picture over here. My name is Thomas Barman. I'm your presenter tonight. What you can do in the right hand corner of the screen that you're looking at, you can expand to full screen. Then you're not seeing the side screens and the details. So that gives you that opportunity to see the entire presentation and later the live charts in full screen mode. Yeah, I also will record the webinar for those who come late, which are not here now, or those who haven't had the opportunity to be right on time. There will be a recording available that I sent to the participants and those who signed up. So there's the SEC disclaimer here. There's a risk in trading, definitely, but we want to do one thing. We want to look tonight of how we can minimize the risk as good as we can. That's an important issue we want to tackle with that seminar. First of all, what makes successful traders? Everybody who trades successful, and mostly it's institutions, they look at key things like price action, momentum, and some use volume or volatility. We use all of them because over the years of experience within trading, and I count about 30, I found out various different ways of how to successfully trade by trading along with the big money. The institutions are the ones that give us the opportunity to see what's going on because they know. They sit on the boards of multiple companies. They are the ones who can really direct the market, and with that they can take influence, and we look what the influence is they take and we trade right along with it. That's what makes NeverLossTrading. Yeah, that's our guidance to success. We document it, and we with that help everybody who signs up for our trading system so that they can clearly see on a chart what's going on, where the direction is going, and we trade along with it. It's a follower concept because as a private investor we can never be a leader, but we can follow the market action, and those who traded successfully, and I can give you historic examples later, they all made the same. They were focusing on moving along with the overall market and not against it. So this is normally how a chart looks. Yeah, ours looks different, but that's the normal view of the chart, where basically you'll see the candlesticks, and here I put Bollinger Bands on and moving averages and a MACD. And that's also at some period of time how I learned to trade, but it was not workable. Why? There's plenty of reasons why it does not work well. First of all, they give indications, those bands and those indicators, but they only work about 55, maximum 60% of the time. The rest you get cut out. The unfortunate situation in that is mostly people who get cut out, they lose more than they gain. And this is where the issue comes into play. And we don't want to be like that, because here we have an expectation of a trade, because MACD tells us trade to the upside, and we trade right when the price reclines, and we set our stop below the low of the last candle low, and here we get nicely stopped out before we commence to the upside and come down again and up and down. So at the beginning everybody tries to make this wonderful assumption that they want to do 3 times as much gain as they lose, but often the price never gets there. And the result is you get stopped out. Maybe you make break even if you're lucky, or the money, which is very bad, is tied up for a very long period of time, where basically in that period of time you can't invest, because by not being able to invest, you're having your money sitting idle with it not working for you. You're not in a position to make any gains, and you're not in a position to commence and move forward. And this is what we try to prevent with NeverLossTrading, because we don't want to optimize the past, and this is what all these moving averages which are used in Bollinger Band and others are doing. They take in consideration past happenings with the actual happening, and out of that they project into the future. But as it says here, mostly the future is not what it was, and this is where the unfortunate situation comes into play, that people are focusing on what's not going to happen. They have the wrong prediction of the future, and how can we make a change? And how did I make a change in the trading system I developed for myself first? I made the change by considering the actual happening and considering different parameters and measures that clearly show how institutions move along, and then I paint them on the screen. Yeah, it took me a while to make Java do all those in a meaningful way and manner, but today, in particular since last year, Java is up to the notch so that all these complicated mathematical operations can be done. And what you see as a result is a clear buy signal here. It says institutions start to buy, and how that is calculated is difficult because it overlays 15 indicators, but the most important is it has a buy signal. You're supposed to buy at the high. That's the strange thing to the signal, which is next day confirmed, and from there we move nicely to the upside, and you see those lines on the left. They indicate where there is a high probability for prices to accumulate. Yeah, so therefore I call those lines price gravitation lines, which have nothing to do with pivot lines. Pivot lines often only calculate the high, the low, and the close from yesterday divided by 3, and that was the way the past traded. The future is different, and that's what I put on a chart here for you. So that's how we know how far we go. And then again, you'll get a signal which says sell if the low is cut out, and that's your goal, or that's your goal, because you know there are my price accumulation points right at those lines, and we have everything framed in red. Red goes to the downside, and you see at all of our charts there's always a red line. If we trail to the upside or if we trail to the downside, that's the stop line. If the stop line is surpassed, then basically the trade is no more valid and there's a directional change happening. Going ahead with that, so we look at market action, and the market action is often that institutions first probe. They see if the market reacts and how they can take their position, because they might have superior knowledge that Google is bringing out something better, something newer, because they have access to information which we don't get, and when we get it, it's mostly too late and it doesn't matter to us. With NeverLossTrading, we are no more dependent on expert opinions or on any news. We see on a price chart what is happening, and with that we move right along with it. Yeah, that's the big advantage of our system. Oh, I apologize, I just hit the screen here. So let's go and move ahead and see the actual move of the price. The actual move of the price is considered directly on the chart, and with that gives us a view into the future of what's happening. And tonight I want to introduce 3 different subsystems in NeverLossTrading, which I first call top-line users. That's for the user who wants to be totally independent, have your own scanners on the screen that screen the entire market, screen the segments that you desire, and get constant information on the hour, on 4 hour, on a daily, or whatever sub time frame you desire to look at the markets of what's going on, and which of the shares get ready to be traded because they have a move above the average of the crossover market, and there's multiple correlations in that. Or the HF stock trader, what it says is high frequency. It gives you a lot of trades, high probable. Some are scalping trades, some are directional trades, where you can participate if you have the time to trade often. If you don't have the time to trade often, Wealth Builder might be a good consideration. Then we look at a bunch of about 50 shares and we trade them with the benefit combining them with stocks, combining the stocks with options, and it's a wonderful system. So those are the 3 systems we want to look at tonight and see if that is something which can help your trading and make you more money, because at the end of the day all NeverLossTrading models are made to produce income for you. That's what they are there for. That's what we hold ourselves accountable for, and that's what we use them for. That's why I developed them. So one of our key measures is called SPOO, the speed unit. Constantly we measure the speed of the market, so price move per time unit observed. So we can use different time units and observe how much the price moves. We as humans would never be possible to do that because it's a dynamic measure, so we let the computer run it. And all our charts for all our studies, we measure the speed unit. It's basically a measure of implied volatility, and that makes it a little complicated, and this is why many don't have it, or you might see it the first time. And with that measure we define our future price move, and we define all happenings of the actual and the future. So you see we moved from a system which looked like 34 price happenings in the past, like on the MACD, or 8 or 9, whatever you take, it's in the past, and now we're looking forward, considering the actual price move of the time, and with that extrapolate into the future happening. And that helps us to be much more precise, because when we now know institutions make a move, we don't have to wait till 8 happenings are through, that we see it on a MACD, a Bollinger Band, a stochastics, or a CCI indicator. We instantaneously recognize it, and we get an alert. And if you day trade with one of our systems, you get an instantaneous sound alert and a little writing which says, Peter, Mark, Paul, trade to the upside, buy or sell. It's very nicely spelled out and gives a proposal on the screen. So that's the background why the system works. In the initial phase, institutional leaders generate a first price move. That first price move gets recognized because it drives the price out of the initial range where it was bound. When that happening is there, our computer triggers it and tells us institutional activity is happening. We combine it definitely also with volume, and then we see, okay, what's going on? While volume is not the major issue at the beginning, volume is a side issue, but it's considered. So when the price moved outside the range, then it has to be confirmed. So that means when leaders make a move, followers need to confirm the move by taking the high or the low of the initial move out. And that's what we see on our chart. That's where we put our entry. And then we trade for one speed unit, which is extrapolated and put on our screen. Because we know one speed unit has a 85% likelihood to be surpassed if that signal is triggered. And within that, we'll take first profits there. Can the price go higher? Definitely. But you saw the red line. There we take our first profits to have the cash back in the box and then trail up. You don't have to get out, but that's what I always suggest. Take your first profit, leave the trade because it already made a move from the initial range to the first trigger range, and then to the next range. At a certain point of price expansion, prices will automatically recline because it gets attractive to put sell orders in when it's to the upside, or buy orders when the whole thing moved to the downside. So that's a key measure. So where you see where the SPOO comes into play for defining our future happening, it's all related to the price move, and only institutions can make those candles or price moves happening, and we observe them. We observe them very early in an initial stage. So then we consider 7 critical elements of successful trading in our trading system. We call them, first of all, it has to be easy. You will see it is, because it's follow red, follow blue, follow clearly spelled out proposals. Then we have with that defined entries, and most important, defined exits. Yeah, so that you never get lost on a system. You know where we propose, or the computer helps you to get the idea and where to get out. Why is it not fully automatic? Because it still needs the human interaction, like in an airplane, a captain, to evaluate the situation. If there is one key major price gravitation line or bounce line right ahead of what the computer calculated, then we need to decide differently. That cannot be whole considered in the system. We as humans can filter 4 million key impressions in a split second. The computer has certain kind of opportunities, but on others it's not as good as we are, and that's why the human element stays in NeverLossTrading. Then we look for high probability, and I will share with you concepts of how to evaluate it. We'll take it from the option table, we take it from the strengths of the indicator, and then we know how the market appraises it and how we appraise the situation, that it's going to go in the desired direction. And then we put it in relation to the risk we take and in relation to the reward we expect, and with that we have a trading plan instantaneously and know the direction where we're going. Yeah, then flexibility, it works for all assets. So that means it does not only work for Google or Microsoft, it works for whatever you desire to trade. But what we do with NeverLossTrading, we share assets where it works best, because their price pattern help us that it works best, and they have institutional engagement because they have a certain volume which is traded every day, which we can't say from stocks that only trade about 300, 400,000 exchange units a day. There often institutions don't have the play, or very few have it, and that's why we keep our hands off, because we want to trade something where institutions show their hand, we see it, and we trade right along with it. Then we talk about money management, how much we put in, because we like to trade with limited risk and open upside opportunity. And there is certain option combinations with stock, or just pure option that we purchase, and I show you option systems that you might not have seen before, and they're not complicated. They can be done from any account. If you have an IRA, if you have a custodian or a cash account, these options can be done everywhere. And I'll show you also, when the trade goes wrong, what we're going to do, and we know that from the beginning, from the get-go, how we can adjust the trade and move it into the right direction. So let's go into a couple of the trade principles that we are looking at. It's always the same for us. We trade red to the upside, red to the downside, that's funny, and blue to the upside. So we see it on the screen, and when you mix red and blue, you get purple, and the purple zone is where we know there is indecision. Institutions haven't decided if they want to go to the upside or to the downside, and that's where we mostly stay out of the trade until we come to an end of the purple zone, where we can re-enter the trade and have mostly a nice directional proposition. You see it here on the chart. There's that purple zone. We come out red, so we go to the downside. We trade down, so we end up after price accumulation in another purple zone. From there we get our trade signal to the upside, and it flies, and we can trail our target with that red line until we get a clear signal to the downside, and then we'll make those moves. And that's what NeverLossTrading is about. We don't know what's going to be in a year or in 6 months, but we'll take the initial opportunity. We trade for 1 SPU, and then we look for 2 and 3 SPUs if it's possible, trail up our stop with that red line, and this gives us high probability trades where initially institutions made the move, others followed, and we have a cascade which we can share, but time tonight will not be enough. Who are those institutions who lead? Who are those who follow? Mostly fund managers, but the fund managers define the world. It goes from pension funds to exchange traded funds. Everybody is following the direction that the leaders take, and we do so too. And we are in a good club of people who make money with it, because institutions make money. Most private investors are suffering and leave their hard-earned money somewhere behind because they don't know how the game is run right. And there are certain theories which are not very helpful, because mostly people lose more than they gain, and that puts you in the wrong spot. And with NeverLossTrading, we want to do the total reverse. We want to put you in the right spot to the market. Yeah, 85% of the markets are anyhow institutional money driven. Their action, because they're big, we can make it visible on the screen, and then we concentrate. We're not looking at the 40,000 stocks and commodities. We concentrate on a few that are really well tradable. So what's a view? It's about 400 shares, and it's about 10 commodities and a couple of others where I can show you where it works best, because the conditions are given that not a few small players can change the market quickly against us, and so we want to take trades that are always in our favor. The odds need to be in our favor, and I'll come to that. Yeah, so that's the way then we trade. We get a clear signal. Yeah, so price move happens for 1 SPU. We define the price move to the next SPU. We either take everything from the market or part, and I'll show you then later how we define that when we go to actual charts. The next trade comes 1, 2, 3, 4 candles later. We trade to the upside, but the beauty is we make money here. We make money here without having a long-term directional bias, which gives us a great advantage over everybody else who always assumes that that goes up forever or that goes down forever, we know from the get-go there's one key element, one SPU, one speed unit, which defines where prices mostly either accumulate or retrace, and then we can take everything from the party and get ready for the next, or we get another signal in the same direction to the down or to the upside, and we trade along with it. We use tables to help when we do option trades for the longer term trades of how to figure out what's better, the option trade or the stock trade. I don't want to run all out of time tonight, but I tell you there's a lot to learn, but it's very simple. It's very simple when you know how to do it, but you have to pick the right option, and that's part of the mentorship program that we show you which option we pick. It's not this Delta 70 option, absolutely not. We pick a different one where we make double the income, and we have clear guidelines of what the probability for success has to be, and I'll show you how it's calculated, and how much gain we want to make at minimum. Yes, so therefore high probability is the name of our game, yeah, and we want to put the odds in our favor and shoot in the right direction with defined entries, defined SPU moves as exits, high probability trades. We put them all in the relation between the risk and the reward, and within that we managed to put the odds in our favor. So that's what I needed for my own trading, and that's what everybody needs, that we only take trades where the odds in our favor, not by a crazy assumption, because when we assume that the price moves 3 times up of the risk we take, we only might have a 10% probability that that price hits. And so then after we lost 8 times, we might not be the same human being anymore who pulls the trigger. And so here we rather take trades for the shorter term, take our profits, accumulate profits and compound interest, and constantly trade to the up or the downside. It doesn't matter to us. We take any direction, depend on your account size or what you want to do. I'll show you trades which you can do in any account, even in the cash account. You go short nicely with that system without infringing any of the NFPA or SEC rules. They are all not an issue with NeverLossTrading. So, and it works, as said, it works for stocks, it works for commodities, yeah, gold you can trade with it, or silver if you like to, or crude oil. It works for currencies, it works for currency pairs or currency futures, it works for treasuries like the 30-year bond. That's all in the box. We have specifically designed training units which help to define how to trade it, and it's all documented. That's an important element I also want to refer for a minute too. All our trades are nicely documented, so you get clear-cut view where to enter, where to exit, how to behave in a trade situation, and what to do if the trade goes against you. Sometimes you have to leave the trade, but if you're in a stock trade, I'll show you trade adjustment methods, which might make a loser a winner, and you get out clean, or you get out with a nice profit because you had to adjust the trade. And that's a very nice way of going through trades, but that's some knowledge which will be shared in the mentorship programs. Yeah. So, and that's how it can work actually. I took one of the shares from Investors Business Daily because one subscriber was very interested in those shares. He traded them since years and he always reads the newspapers of them. So here's CLF. Yeah. The share, if we had bought it at that point in time here, till today, which was in November, had made a move of minus $13. So if we use the NeverLossTrading method and just take the entries where they are proposed and confirmed, and we trade to the up and the downside, the picture looks very different. So here we would have traded to the downside, making a plus of $10, and that would be if we trade the share with an option we would be much nicer on. And here we will make $3 to the downside, taking the confirmed signal to the downside. And here we'll make $13 to the downside, taking that hype, while the signal is clear up there and says here, Thomas, trade to the downside, get short in the way and manner you know, and get long here, get long here. And instead of making a loss of $13, we made a plus of $42 because we were trading all those waves. We never trade with NeverLossTrading for the very, very long time and very long time frame. We'll take the waves to the downside, we take them to the upside, we take them to the downside. It's basically harmonic waves of the market digitalized into those frames of blue up and red down that the computer synthesizes and gives us proposals on where to best enter and where to best exit. You'll always see in the left corner one SPU is always up here, and I show you some live charts and you can give me some proposals of what to look at, and we'll see how accurate and how clearly it works, not only on a PowerPoint presentation but on the real deal. Yeah, so here's for example Apple before it made the real drop. And so it would have made from the beginning of time. I use the weekly chart, which is possible to be taken with the indicators of the HF, yeah, the high frequencies trading system. And so we'll take the downside trades, we'll take the upside trades, and instead of making a $175 gain, we make a $623 gain, or 3.5 times more than just trading one directional. And I did not even do compounding interest, because if you trade the right options that I'll teach you, you'll make a lot of bang with those moves. Trust me, the option trades are beautiful, in particular when the option moves multiple dollars, then the gamma hits the delta, and within that money comes your way. It's beautiful, and Apple is one of the nicest share to trade with options. It's very expensive on the share side, but with options very predictable. Why? Look at those candles, they overlap, they go nicely, it's not gapping wildly up and down except at earnings, and it's nice trades that you can do, and it's multi-dollar trades, and it's painted on a screen, and I'll show you even with the option how to pick them, how to know when it's right, how they run, how their pricing is done, all on the screen, all live. I don't know if you ever use the level 2 screen for option plays. I show you where the market makers sit, how that's made, and how you can do that any given day at your home. That's important. With NeverLossTrading, we're not using the trading room that you have to follow, because there's so many opportunities one can take, and it depends on the individual risk assessment. There's a lot of people that make nice money with Microsoft, one of my favorite shares, because it moves very predictable. It has a high engagement of institutional investors, and when the signal is there, I'll take it. It's very simple. You have to buy a couple of contracts, but they every day about 4,000 or 5,000 option contracts per strike price I exchange, so it has enough space for us to place our orders without infringing the market. So, and on option trades, we'll learn how to take high profitability and high probability. High probability trades are when an option is below 14 days, we want the price move of the underlying give us at least a 50% return. When we are above 30 days, we want to have at least a 30% return. If the calculation that I will show you in the mentorships is not giving us that return, we don't trade. We might trade the share, we might trade a combination of the share with the option, but then we don't take the trade, because we have enough on the plate that we can make those returns. We can make them any given day. And I developed a report which comes, for example, with the HF system, or there's other reports that you can subscribe to, where you will see which share is ready to be traded. They're done at night. And if you are an owner of the top line system, you do them online, and they get done any hour, any 5 minutes, whatever you desire. You see what the market is doing and what's going on. And with that, we can minimize our risk, and we can maximize our profits. Yeah. So, because capital preservation, that's key, and trade adjustment methods are one way to go with that, because we need to have methods on hand when we enter a trade to know what we do when it goes wrong. The easiest is to get out, but that's also often hard for people to do, because they hold on to it, and that's the worst people can do, to hold on to a trade that moves the wrong side. We'll need to know either to adjust it or to get out. And I'll show you one example tonight of like a put option, when we bought it, of how to adjust it and how to make that easy to still make a loser a winner. Yeah, because we want to stay in control for whatever we do in trading. It's for our money, and our money is supposed to work for us. So here's the short example that I say. So we have a down expectation, we buy a put, and we buy an out of the money put. And we then have a limited risk, because the most we can lose is the premium we paid. Now news come out and the price gaps up, so it goes totally against us. What are we going to do? Our method on hand is we sell a put with the strike price above. We collect the premium if we have the clear assumption after the gap up that that's the direction to take, and with that we have a simple adjustment method. Might sound simplistic, but you know what, this is a very short example to give you something on hand where you know if the thing goes against you, even so it's not supposed to, because usually with our method we do not trade over earnings announcements. We trade into earnings and out of earnings, but over earnings we don't take the gamble. And usually during the normal days we don't have these huge gap ups except of shares coming out with news. But if we hold a position, we should know when news come out that can trigger such an event, and if it happens, what we do to adjust our trade and to make a potential loser a winner. So let's look a little bit into a couple of charts that I put up here of how the trading systems look like. That's a top line chart. So the top line chart basically has three elements. It has the price chart, and on the price chart you see red signals and blue signals and orange. Orange are bottom finders and top finders. Red are directional signals, very strong. Even that's the only system where we can take the signal to the downside or to the upside in a purple zone. And that's not made up. We can take the actual chart. You'll see the direction which is triggered. If we look here, it says down, it goes down, it says up, it goes up, it says down, it goes down. Does it always work? No. But if we count them up, we often have an above 80% probability of success, and you learn which trades to take. In addition, we have a method which others sell alone for about $10,000 to put the history on a chart. Here you see for ExxonMobil in a purple line, that is the historic price pattern between certain points, and ExxonMobil kind of follows a historic price pattern, while the actual pattern is a little bit below the price pattern. You have to look between the peaks and valleys to see if that gives you an indication of where the share price is going. Some run dependent on history, some run independent, but will have that function, and I'll teach you of how to use it in your benefit at certain points in time. And I'll share a trade that I made for Google on a historic pattern. It was just beautiful. Then you see here additional price triggers that compare the individual stock, here ExxonMobil, to the overall market, and give us triggers for potential moves where the stock runs very independent from the overall market. And those happenings we want, because then institutions decide Exxon is special, we buy or sell it, and that's when we want to enter. And that's the function goes here, therefore it's called a correlation, and we take a correlation to the spider. The spider is the best way of looking at the market, because it really is stock. It's an ETF of the S&P 500. That stock, all stocks are bought. That's the nicest evaluation of the market, and that's what we correlate to decide if a share has a dependent or independent happening. And another correlation coefficient you see here. So Exxon and the S&P 500 are more than 85% connected and moving in the right and the same direction. Here at that point in time, it's an independent and opposite to market a move is happening, and those are beautiful ones. There we should have gone short, because we see that zone of direct correlation to the market was left, and by leaving the zone, an independent happening to the downside occurred while the market moved up. And that's what we want to have, independent happenings, and these correlation coefficients give us that, and that's part of how we trade in the top line concept. Top line concept takes highest probability trades, direct correlation to the overall market, independent happenings. That's an HF chart where we can take day trade, where we can take daily charts or weekly charts. Here I took an example of a weekly chart, because the indicators are very strong on weeklies. Here we have the happening trade to the upside on Apple here, and see if you traced and trailed it up between 607 and 680, would have been beautiful. The same to the downside. Here we get an indication to the upside and then to the downside, and you see how well we frame it and how good the indicators give us a strict, clear direction and confirmed direction of what we shall trade. And if we take a longer term perspective, that's the weekly chart, or we take the weekly chart to confirm our daily chart action. That's how we work it together, and that's the HF concept which you see here on a chart. It takes the base elements, but it has different indicators so that you can trade more often. I just took an example of a weekly chart. On a daily chart it's the same. That's the original Wealth Builder chart which we use, where we look at lower studies that combine happenings and give us then the entry to the up or the downside. That's what I refer to in my book. In the book you see only arrow alignments because Java didn't allow me to put those price proposals in at the point in time, and meanwhile that was able to happen. And so within that we not only look for arrow alignments, we see it says here 3 arrow alignment, the commander graph which is a measure for the trend, the denominator which is a measure for the balance of power, who's in charge, buyers or sellers, and the momentum meter, which we call trader meter here. They all work together, and these are all independently developed studies. This is nothing that you find as a standard study somewhere in TradeStation or in any Thinkorswim or TD Ameritrade or anywhere else. That's what I developed for myself in its own build, and they work in harmony and work together. This one is a big study, but it's nice because you know here sellers are in command. It's all red. Here you know buyers are in command, and you don't take the wrong approach. One thing that I teach people, I can teach it for free tonight here, what's happening when buyers are in command. People say prices go up, that's true, but the key happening is buyers are in command is when the prices drop, the buyers buy. That's what you want to see. When sellers are in demand and the prices rise, the seller sells. That's the key how you see in the market of what's going on. It's not just in the price action, it's in the action when a price move in the opposite direction happens. Then you will see how the orders trigger through and how volume is generated, in particular when prices rise. Yeah, you'll see here price drop, and that's highlighted red. It's a directional volume move. The next day prices rise and sellers sell out of it, and here you see another blue candle which say okay, on high pricing people sold out of that stock. Here Google ran it to the downside, and that's how we trade it. And here we stay out. You can take a gamble, but I don't like to take the gambles over earnings. I rather trade into earnings. I trade right after, because you know when a share gaps up like here, there's multiple opportunities of either placing puts down here if you do option trades, or you'll do directional trades within buying calls here and move them to the upside. It's nice. It's nice trades, very nice trades that we can do, taking directional trades with limited risk and a lot of upside opportunities. Yeah. So therefore, these are the 3 systems that I'm discussing tonight. If you want to be an independent investor, take the top line, because it gives you scanners, it gives you everything, watch lists, and it's custom made on your computer. So it's not that you get a couple of CDs and a lot of trouble. I'll use a computer link, get into your computer, set it all up. It's you don't need to be present, you can be, but I'll program your computer so that you have everything sitting there, and then day by day you see how the system runs. I'll try to do individualized training as good as I can, sometimes do small groups, but a lot of individual training so that you really get the system. Because the hardest thing is to trade what you see. My slogan is trade what you see, but we see with our brain, not with our eyes, and that's the training to be taken and the coaching. And this is why those programs, they are coming with what I call mentorship program. So it's a couple of days of coaching, and we can do it to your leisure. And then afterwards I stay kind of like 6 months with you, and I'll get your questions answered, and I give you more education, so that it really sticks with you. If you are a high frequent trader so that you can trade often, the HF program is a great program for you. If you want to do 1-2 trades a month, simple, easy, nicely protected, then Wealth Building is the program that suits you best. Yeah, if you are a day trader, I have separate programs which intermix. If you want to sign up for more than one, I'll work with you of finding a solution that can suit both sides best. Yeah, so here is a short pricing example of what that all is up for. Yeah, the top line sells for $9,997. I'll run a promotion tonight, having that for $8,997. You might say it's a steep price, but it's a productivity model. It takes a lot of hours to put on your machine and talk to you. He'll pay you back. I had a doctor, he got paid back in the first 3 weeks after he bought 4 of my programs, because he said, I want to buy everything. He was so convinced, and he got the money back quick. If you trade smaller increments, then maybe the HF program is your program to start, because it gives you many more trades. Yeah, it gives you about 4 times more trades than this program is giving you, and with that you have your money back quicker. And there's a special offer with a $2,000 discount that I'm having tonight, selling the program for $6,797. Or if you say, I'm not trading that often, Thomas, I'll need a simple program that works for me, I'll have a special offer for the wealth building program tonight, which goes for $5,797. And you see here the asset classes that are touched. Here we look at stocks only at the HF program. At the top line, we look through all categories and give you trades. It even has the ability to day trade. Yeah, so that has a day trading program included in it. And if you look at building wealth within having very secure trades, then that is the best program for you to run. Let's look how that all comes together and looks on the screen. And I'll do some screen sharing with you, and we'll look at a couple of opportunities of how the system runs through the day. So let's, for example, here we have some. Let's go into Google. Yeah, so that's the top line program. Yeah, so here on that top line program, I looked at that day, and what did it say to me? Yeah, on 114, short Google into earnings, historic movement, short into earnings. Then it did its own course, but that's why I say I trade in, I trade out. Yeah, so here went short into Google, and here before expiration I left my trade, and I was very happy because it looks minuscule on that scale, but I ended up buying a put for $5, and I sold it for $14.19. That was not too bad, what wouldn't you say? And I was in a trade 3 days. And this is the power of that system, because you get high probability signals. You know where to get in and where to get out. Let me take that line out for a moment. Yeah, so delete all drawings, because you know where prices accumulate. You look to the left, you see those lines on the chart, those are price accumulation points. Here, oops, it gives me a text document, so that's not what it is. So here we'll move out. I'll put you on a trend line. So there you know, if you take that trade to the upside, there you know to better take profits. And you had multiple days of taking your profit up there before you get out. Yeah, so if you trade this and you buy the right option at 7.26 and you take your profit at 7.37, you make $10. There should be a lot on the table for you, and if you do it right, you're 2-3 days in the trade, and next day you might trade Apple or Netflix or Bank of America, depending on what's hot. Our screener tells us what's ready to be traded, and that's what we take on our plate. So a couple of days later then, the beautiful trade came, $5 in, $14.90 out. And this is how the system works, and this is why it pays itself back very nicely, but also why it takes a lot of effort for me to teach it to you, to give it to you, to put it on your screen. There is no multiple license fees. It's a one-time. It's licensed to you, so you can't sell it again, because you know the proprietary developer stays still with Nobel Living, the company for NeverLossTrading, but you can use it year in, year out without paying another license fees. You pay it up front, and then you run the program, because most others they'll charge you another $3,000 a year for relicensing, and you'll have the historic pattern, everything in one program, and there your trade came again. It says clearly buy above 749. If you did that, yeah, you bought here at 750, let's say 750, and you got out at 775, that's another $25 up. Doing that with an option, whew, It is the most fantastic thing. And this is how to trade those big shares. You take option trades, limited risk, huge upsides, because they produce. But if you look at a normal chart, you can't see what we are seeing here, and with that you are trading a different trade. Here, for example, you had a buy signal, but you buy above 738.28. The price never got there, so you're not in a trade, because only when the price jumps out of the range that is given by institutions, then we trade. If our price direction is not confirmed, the trade's not happening. You had a short signal, but the next day the price did never cut out the low, which was here 758.27. The next day the low was 759, so it was a dollar above it. We never been in a trade in the wrong direction, because we're not taking a directional signal. We're taking a directional signal when it's confirmed, because at that point in time we would know the followers follow the leader direction and take the price out. But here, what did I say prior? When buyers are in command, price drops, get bought, and that exactly happens. So we had a big candle here, a lot of exchange, price drop the next day, another highlighted candle. That's our volume indicator telling you to trade to the upside. Yeah, nice and wonderful. Let me give you another example. So what could we use? I see here somebody wants to use it. Look at that's a weekly chart. So no, that's a daily chart. So I go X. Yeah, that's US Steel. Yeah, so here, what do we see? Let's focus on those trades. Here, US Steel went into a purple zone, indecision. Out of the purple zone, clearly defined downside signal, one SPU, that is about here. Yeah, the SPU is here, 79 cents. So if the price drops 79 cents, we take our money off the plate. That's what it did, and we are out of the trade. So here we get a buy signal to the upside. Upside's not confirmed, no trade. Again here, buy if the price next candle surpasses the upside. Didn't do it, so we have no trade. And that's what we can do with any given security. You'll only trade when it's worthwhile for you to trade, and you'll trade these directions that are painted on the screen for you. Yeah, so let's go to the left here, because oops, that was a little fast. Yeah, so let's look at this one. Candles is trade to the upside, next day didn't get there, no trade. Downside, next day didn't get there, no trade. But here we have trade situation. Yeah, buy signal. If the buy signal is surpassed the next day on the high of 1976, we trade. It's gapped up. Okay, so you'll trade in there, and you trade to the upside for one SPU. That's above here, because one SPU is about 34 cents. That looks small, but with the right option trade, it'll give you 12 cents on 20 cents investment. That's a 50% return. You make that in 2 days, and you get out again. And that is what I teach you in all dimensions of how we can participate in every price direction with that system and take the benefit of the market, because we are trading short rather than long term. So what other instrument can we look at? We had Google. Let's do Netflix. It's always a nice share that I like to look at, because it has institutional engagement. So now we are on a high, but also on a high you had here enter, trade to the upside. Yep, we would have sweated a little. There's the target. It came back. It didn't take out our low, because it sits all the way up high here. So that day here we hit our target, or this day we are getting out. We got another signal. Take your profit off here. That's the green dot on the graph. So in one day you entered, the next day you got in, because you got confirmed. So 1 day, 2 days, 3 days, 4 days later you had your profit. 1 day in, 1 day, 2 days, you got in that next day. Here you got your profit. So you have 2 profits in 1, 2, 3, 4, 5, 6, 7, 8 days. That's not bad, because Mr. Einstein told us the biggest invention of humankind is compounding interest, and that's what you do. You'll make your money, you'll move ahead, and you get out of the trade. And this is what the system is doing, and I developed certain systems that do more scalping, yeah, because here you have no top line signal at all. But where with HF you take more individual trades, With the top line, you take more confirmed trades, and then surely we have for the day traders day trading system. One is also an HF, and he has an income generating system where you can take money right off the market and you do it continuously. I can get you over to the chart of how it looks today. There wasn't so many trades on the 1 hour chart that I like to trade, but look here, it became in the day at 9 o'clock. We had that big sucker candle to the downside. We didn't catch that. Yeah, on the 1 hour chart we caught it on the 30-minute chart or on 10 minutes, but I don't want to go on all time frames. Then we have the reversal, and it says us here buy above 1501. So 1501 got surpassed here. We had our clearly defined target there, or that line is a price accumulation line that we knew from the get-go. That's a teaching I give you as well. So those are your two price targets. So if you followed the direction, you got on at 1501. You got out at 1504, 80, 75, so you make 3.75 points depending on what you pound behind your opportunity. You go out with a very nice profit, and you don't need to look tick for tick. You look at the reference time frame. I'll show you here. I use a 1 hour chart a lot because it works very, very, very fine. Did it only work today like this? No. Works every given day. Nope. That's the overnight session is usually purplish. Yeah, so here you had the same, prices rise, and get us in the trade with multiple signals all at once. Here we go to the downside, coming out of purple zone, go to the downside, take your profit here. You get clear guidance on all time frames with NeverLossTrading, and you can use it as a key productivity tool. And I hope I can give you something on hand which betters your trading and helps you to be a better trader. I'm open for your questions. Are there things you want to look at? Are you ready for signing up and coming on board of learning a system which is really going to make a difference? And I'll put everything I have in it to teach you that you can make a difference with that system. So you have the little chat box on the left-hand corner here, chat. That should be active. So if you have questions, get them in here. I try to cover them as good as I can in tonight's session. If you want to have a more individualized session, I also offer you an individualized session. Write me an email, contact@neverlosstrading.com, and I'll guide you a little more individually through to see what suits you best. And that also is telling you that's not just a couple of CDs and you are left alone. It's a system and a concept of care where we jointly work and a lot of individualized training to move you ahead in being a successful trader. That's the aim. That's what I take pride in. And it took me long to get myself there. And first of all, I developed it for me, but it was too selfish to just have it for me and making my income. I also want to share it with others. I charge for it because it takes also a lot of hours. And usually what's for free is nothing worse. So I hope you'll see the benefit, and if you have questions, put them down on here, and I'm ready to work with them tonight. If you have no questions, think about if that system is right for you. If you find it right, write me an email. I get together with you on the phone or on another web session where we can jointly look at if it benefits you. And I'll hope I give you value that pays you back quick on the tuition, and that's what I saw. People who really trade, they get their tuition back quick and make good inroads with it. So I'm seeing no question coming up. If that's the case, then I thank you for participating in tonight's meeting. Hoping to hear from you. Write me email, contact@NeverLossTrading always gets to me. I have a couple of other ones, but that's always that triggers my attention. Appreciate your time. You'll have a good night, and I'm looking forward to hearing back from you. Thank you very much.